Hello guys, welcome to my YouTube channel. Today we're going to see how to identify shift of market structure or market structure shift correctly. Some traders may finish their top-down analysis and know the direction of the trend or their daily bias, but fail to identify correctly what shift of market structure is. Shift of market structure means change in the direction of the market. Let's say we're having a downtrend and we and trade is going down like this, and at the end of the day we finally have a break above the previous high. Initially in a downtrend you always have markets breaking the lows while respecting the highs. Now at this point that we have a break of the high for the first time, it is regarded as shift of market structure. But this is what usually happen in the market. Sometimes you have the candle go above the high like this, and it retraces below the high and closes with a wick above the high and retraces with a wick above the high. Now, what most traders do is that they usually regard the break above the high with a wick as a structural shift, maybe on their lower time frame, right? On lower time frame, maybe you're trading on your execution is on 15 minutes, normally based on your analysis and how you trade, and you end up seeing this on a 5 minute or on a 1 minute. The result will not always be favorable to you if this is how it is on the 15 minutes and you end up seeing a different thing on a lower time frame. Now, one thing with forex is that the price is fractal. So for your most accurate and most and your A trade setup, I mean your A trade setup, the one that have a higher confirmation and higher chances of being a winning trade, you most likely see this trade idea showing itself on a different time frame. You will see it clearly on 1 hour, you'll see it clearly on 15 minutes, you'll see it clearly on 5 minutes. Note that your higher time frame will give you a different thing and you're seeing a different thing on a lower time frame. Do not take such trade. So in these cases, this is not a market structure shift as it only grab liquidity above the old high. It only grab liquidity above the old high. In most cases, if this thing occur, it means that the buyers try to outweigh the sellers here, but the sellers were still in much control and it pushes price down and close with a rejection candle. In this case, you'll most likely see price continue in a downtrend. So this is not one of the things, this is one of the things you need to pay attention to as a forex trader to identify correctly shift of market structure and liquidity grab above old high or below old low. Let me show you an example of this. We have price coming down and then we have this thing happen here. We have this low, we have this high, we have this low, we have this high, right? Just like a mitigation, right? Failure swing means price is losing the momentum to go high here, right? It's losing the momentum to go high and then it's showing interest of going down. But this is what happened. We have this low that has been pierced through by price. The first price action pierced through this low and then closes above the low. The second one open, trade up high, retraces to take out the low again and then closes above the low. And then the third one traded below the low, right? Below the low again and retraces and close below the low, above the low. And then the fourth candle upon and took out all the lows, right? Took out all the lows. But see what happened again. It closed above the low. This should tell you that at this point, the sellers are not ready. Why? Because we failed to close below this low. We failed to close below this low. We failed to close below this particular low. If at all, for the fourth candle, we have something like this, it closes below the low. At this point, we have a shift of market structure and we may expect a retracement into this range, then we move down. But what happened is that we failed to close below the low and price retraces and continue going up. This shows that the sellers try to move price down, but they don't have the momentum or they don't have the strength to take over the buyers as at this point. So they only pick orders, right? It only pick orders below this low and below this low, right? In form of liquidity and continue going up. If you if you apply your market structure shift strategy in this way, you're going to see significant results in confluence with your higher time frame top-down analysis. Always ensure that on your time frame that you used to see your setup, you have a clear market structure shift with a body of the candle closing below the low or above the low, above the high in this case. And also, if you identify your market structure, you identify structure with a wick, especially if you are marking your high or low, you mark the highest points, right? The highest point, not the body. You don't identify structure with the body. For market structure shift, you identify it with the body of the candle. This means that if the body of the candle did not close below the low or above the high, you will not regard it as something significant in terms of market structure shift. And also, this is why you should wait for candle closure before making your decision in the market. Ensure that the candle closes before you make your most significant decision in your setup or in confirming your trade idea. This is because when this candle was trading down, you might have seen it as finally you have a market structure shift, but no, after the close of the candle, you realize that it did not close below the low. The same thing with this, the same thing, and the fourth candle also. I hope you find this insightful. If this information is useful to you, hit the like button and don't forget to subscribe for more content like this. Thank you and have a good trading week.